Hi there. Okay, here's video number 62. But this will be video number 24 of module 3, and we're going to be using the Ichimoku Kinko Hayo indicator. Alright. Yeah, that was a bit of a mouthful. Okay, so go ahead and choose your template right down here. Strategy number 22. Okay. And the rules are pretty simple, really. The first rule for a sell trade is we're looking for the ADX right here. We're looking for the ADX to cross from green to go below the red, so the red here will then cross over and go above the green. Alright, but we're also looking for the candles. Alright, so the second is our candles. Right underneath this spot, the candles seem to be right there, so that was no good. Alright, so let's see if we can find another example. Okay, let's just take that off and let's find a proper buy signal. Okay, that was close. Okay, here's one. Okay, here, let me just move that off. Here we can see where the green goes above the red line. So the positive directional index is above the negative directional index right at this point there. We can see that it's right under the line of that handle there, and that candle is also green. So our first rule is there. Our second rule, is it above the cloud? Okay, is it above the cloud? Yes, it is. So that's our second rule. The third rule is that what is the color of the candle? Is it the same color, as the directional movement index? Yes, it is. It's green. Alright, so that's our third rule. Okay, and then we can go long. Alright, so let's take a look at a short trade opportunity. Here is where it crosses the red line, the negative directional index crosses above the positive directional index, and I believe it actually points to this candle right here, but this candle is above the cloud, so that's no go. Alright, let's go ahead and find a short signal. Okay, here there's where the negative directional index crosses above the positive directional index. However, although the candles seem to be below the cloud, or at least the top portion of it, they haven't completely come out. Alright, so that would be a no-go. Alright. Okay, here's one. We can now see that the cloud is up here. There's no candles touching it whatsoever. We have this area right there, which is our first rule, and the negative directional index is above the positive directional index, which is good, and that actually lines up, I believe, with this candle right here, and it's also the same color, so we get signal 2 and 3 out of our rules, 1, 2 and 3 correct, so we can go short and take this as far as wherever you want to take it. Trail step, don't forget to trail step all the time, going from 2 down to 1 to 0.5 and so forth and so on and so on. Alright, if you don't want to take any more from here, then just basically keep that 5 going on, but just move the stop loss lower and lower along with it. Alright, until it bounces back and goes the other way and collect that, whatever it's worth. Okay, let's just give you a couple more examples so you can get basically a better grasp of what it is that we're trying to do. Let's have a look. This is where it crosses over. We're below the cloud. and this area right here is red, so indeed we can go ahead and take that sell signal and go short with it. Alright, let's see if there's a buy signal right here where you got the green going above the red. It's actually right above, actually no it's not, it's right on that red candle. Well, that's no good, so there's one exception to the rule. So, well, it's not an exception really, but there's one of the rules that didn't actually come through for us. It was pretty close. This one doesn't meet our rule. This one doesn't meet our rule because the currency prices are still below. Let's take a look at this one. And there's an area right here. So here we go. We've got the area where the green has gone above the red, and it also points to that green bar right there, plus we're above the cloud and we could ride that for as long as you want. Again, trail stepping as we did before. Okay, so there you have it, ladies and gentlemen, a pretty simple strategy there. Doesn't really require that much work, doesn't require that much thought. It's a mechanical strategy. You can see that every time we met our rule exactly, we met rule number 1, we met rule number 2, and we met rule number 3. We didn't make any exceptions. We were very strict in our rules, and every time that we were strict in our rules, the trade came out in a positive direction to the predicted way that we thought it was going to go in, head towards. Okay, so give that a go. You might actually like this one to use on a constant basis. You know, as soon as that condition meets true, you shouldn't really second guess yourself, because there's no second guessing yourself, because it had 100% perfect rate. Okay, I mean, you're more than welcome to go back even further, but you'll find it has a very high success rate. Alright, so give that a go, and I'll see you very soon in the next video. Bye for now.